Hello everybody and welcome to Mango Monkey Learns Money. In my channel, I want to give you guys ideas on how to become a millionaire, and I truly believe that this can be done if you can invest only $100 per week consistently and have the patience to wait up to 55 years. So I upload daily videos around saving money, making money, and investing money to help you get that extra $100 to invest and to help you invest well. In fact, you do not need to invest well. You just need to make sure you do not invest in a stupid way. If you invest your money and earn a measly 4% per annum return, you will need 55 years to become a millionaire. But the smarter you can invest, the higher your rate of return, and the faster you can reach that coveted millionaire status. Today's video is going to be about investing in the real estate market. Recently, I mentioned that investing in stocks is easier compared to real estate because you need a lot of money to invest in real estate. But it turns out that I was wrong. Today, I'm going to reveal to you how it is possible to also invest in property with as little as $100. Well, perhaps $100 is not cost effective because you need to pay a fee of at least $5, and that's if you use Superhero to buy the property. If you use Comsec, the fee is going to be at least $10. But you can get started with maybe $1,000, and that way the fee becomes cost effective as a percentage of the amount of money that you put in. The key to investing into property with as little as $100 or $1,000 is to buy something called REIT, R-E-I-T, which stands for Real Estate Investment Trust. It is a trust or a business entity which owns and manages hundreds of properties, and it is funded by a portion of debt and a portion of equity. That is your money, the shareholders' money. When you buy a stock exchange listed REIT, you buy a stock and also a unit in a unit trust. You get a share of the rental income and also the capital growth when the property is sold. The most common type of property assets that REITs have exposure to include retail property, including shopping centers, grocery stores, and outlet stores. The second is industrial property, such as warehouses and distribution centers. The third category is residential property, which may include student accommodation, apartment buildings, and sometimes also standalone homes. The fourth category is office buildings, ranging from high-rise office buildings to small-scale office parks. If you're still here, you are awesome. I think it means you like me at least a little bit, therefore please consider hitting the like button and sharing this video with a friend. I'm not going to recommend any particular REITs to you because I'm not a financial planner and I do not provide financial advice or any advice whatsoever. But some of the REITs I have heard of are the following. The first one is Charter Hall Long Wale REIT. The ASX ticker code for this is CLW. The second one is the Centuria Industrial REIT. The ASX code for this is CIP. The third one is Cromwell Property Group. The code for this is CMW, and I have personally held Cromwell. Cromwell invests in and operate office buildings. I don't know too much about the other two REITs, but I heard about them on YouTube and apparently they are good. So what are the benefits of investing in REIT instead of buying a physical house or apartment? Number one, you can get started with very little money. Something like $1,000 is already enough to buy into REIT economically. And something like $10,000 is definitely more than enough. Number two, you do not need to apply for a home loan and you do not need to have a job. As long as you have money, you're sweet. Number three, you still get to use leverage. This is because the REIT company itself borrows money from the bank. So you can effectively still borrow money from the bank and amplify your rate of return even though you do not have a job. Amazing, isn't it? Number 4, you can sell your REITs today and get the money in your bank account a couple of days later. You cannot do that with a house. Number 5, most REITs invest in commercial properties and they tend to have a higher rental yield. That is higher rental income compared to your typical house or apartment, assuming you do not borrow money to buy that. The leverage with REIT is smaller, the debt to equity ratio is smaller, but the rental yield as a percentage of the total property value is bigger. So would you rather buy REIT or buy a real house? Let me know in the comments below.